In a previous video, we looked at SACCOs, and I feel like I didn't break it down. So this video will be for those of you who have probably received a document encouraging you to join a SACCO at the workplace, or a SACCO that is around you, a SACCO at church and that sort of thing, and have pushed it aside or have torn it and thrown it in the bin because you're like, oh, please, SACCOs are so old school. This video is for you. This is Rina Hicks here on MoneyWise, where we create, grow, and preserve wealth. So what is a SACCO? A SACCO is a society that is created and run by people who have a common vision, a common goal. And these people come together, minimum 10 of them, and say, you know what, this is what we want to do. We want to empower our members financially and give them opportunities that will help them to retire comfortable. And so they come together and help their members to be able to access credit, to be able to save and invest so that they're able to grow their income and grow their wealth. And that's really the purpose of a SACCO, and that is what a SACCO is. Now, there are many benefits of a SACCO. The main thing I need you to understand is that SACCOs are formed by people who have a common bond. So either they work together, they're in the same industry. So you find SACCOs for teachers, or SACCOs for policemen, or SACCOs for people in the medical field, SACCOs for people in the energy sector and that sort of thing. They all have to have a common bond. That's the way the regulation works. And so the benefits of a SACCO are that, firstly, you are forced to save, because most SACCOs will require their members to contribute a certain amount of money per month towards their savings. And this is awesome because it forces you to save. But not only is it great because it forces you to save, but also because the interest that they give you is actually quite attractive, more attractive than you'll get by saving in the bank. So for instance, a lot of the SACCOs will give you an interest or what they call a dividend between 8% to 15%, which is awesome. I know of a SACCO that has actually given over 20% per annum to its members because it had a couple of years that were really good. And so they were able to do that. The other benefit of a SACCO is that you're able to access credit easily. You know, you go to the SACCO, you have an emergency, you need to pay school fees, you have a medical emergency, you can borrow up to 3 times how much you have saved, and they can process it very quickly. They know you, they don't need to process too many things, you're able to get the loan quite quickly, and you don't necessarily have to have collateral or security. They will use a guarantee from another SACCO member and they'll give you the loan. Or if you have security, great, they'll use your security and will lend you the money. Or if you can get a letter from your workplace guaranteeing that your salary, your employer will cut a bit of your salary towards paying the loan repayments, the SACCO will be able to give you a loan. Now, the other thing is a SACCO has products that it offers its members. Because, like I said, the main aim is to empower the members financially. And so it will have land, houses, or other opportunities, investment opportunities available for its members. And so if you're a member of that SACCO, you will get those investment opportunities at a discounted price most of the time. At a discounted price, they'll have done due diligence, they'll have made sure that they only present those opportunities that are viable to their members. And so for you, your SACCO membership allows you to participate in those opportunities. The other thing is, with a SACCO, is that even when you borrow and you have taken a loan, it will still continue to force you to save by contributing that amount of money per month that you continue to, and it gives you that continued interest per month. So even as you've borrowed money and you're repaying, you still are saving and continuing to save with your SACCO, which is really good. There's another benefit of SACCOs that I forgot to mention, and this benefit is that the interest rate on loans does not change as frequently as it does with the banks. For example, in Kenya, when you borrow money from a SACCO, the maximum interest they charge is 12% per annum. And by the way, it has been 12% for quite a while. Whereas for banks, they base their loan interest on the central bank reference rate, and that moves quite, every so often, or it's based on risk profiles of their clientele or on your circumstances, what you're borrowing for, and all sorts of things. If it's a mortgage, it's different from if it's a personal unsecured loan and things like that. But with a SACCO, whether it is unsecured or it is secured, the rate is the same. So it helps you plan. The only thing I'd ask you to check is when you borrow that loan, check whether it's on a reducing balance or not. If it's on a reducing balance, then it's actually cheaper than borrowing from the bank. I would like to mention a few more things that you need to watch out for as you invest or put money in a SACCO, because there are things you have to be careful about as you check and as you evaluate the different SACCOs that exist. So there you have it. If you enjoyed this video, please tell me about it. I'd like to hear your experience with SACCOs. What are your thoughts where SACCOs are concerned? Some of us have had awesome experiences, some are not so great. I want to hear about them. Write in our comment section and let's have a conversation. I don't want this to be a monologue. Let's learn from one another. So subscribe, share the video, like it, and let's grow together. This is Rina Hicks and you're on MoneyWise, where we create, grow, and preserve wealth.